the the three legs that we need, I think Chuck Akery calls it the three-legged stool. The three legs that we need for these long multi-baggers is, first of all, the core economics of the business should have very high returns on invested capital, ideally without the use of debt, right? So you basically, like McDonald's doesn't need to borrow money to make a lot of money. The second is that we want very high integrity management, and we want insider ownership, kind of alignment of interest, where there's a smart entrepreneur or someone or insiders who own it, so they've got incentives. And the third is that we want a very long runway, so where we can see that this thing can go on for a very long time.
Don't forget to like and subscribe if you haven't done it already.
One of the great things about the investing business is that, unlike many other endeavors, like if you play basketball or cricket or something else, is that you can keep getting better at this throughout your life. So it's kind of an endeavor where continuous improvement and learning possible and actually desirable, which is wonderful. So what I wanted to actually kind of talk to you about today is that when we look at this large tent called value investing, it encapsulates quite a range of approaches and focuses one could have while trying to create wealth and generate good returns and so on. So for example, buying a dollar that is trading for 50 cents would be a great way to be a value investor. Focusing on spin-offs, which Joel Greenblatt wrote about, is another way. Focusing on cannibals, which is companies that are buying back their stock. Looking at what I call spawners, which is businesses that are really good at creating new businesses and then, spinning those off. So that's another way one can go. Focusing on multi-baggers is also well within the tent of value investing. One could do special situation investing, merger arbitrage. It's a long list of endeavors and initiatives. Ben Graham suggested net investing and so on. So there's many different approaches one can take, which would all be within the tent of value investing. They say that you're old too soon and wise too late. And I've made investments over the last quarter century or more, which have covered pretty much almost all of these different ways of looking at things. We also have things like PE of ones, things trading at low multiples or future PE of ones and that sort of thing as well. What I've been able to glean when I look at all of these different initiatives or different approaches that one can take is that across the globe, there are maybe 50,000 or 100,000 stocks in different markets around the world. And if one were to say that I only want to invest in companies that are trading at 1 or 2 times earnings, one can find those. One, cast the net wide and deep. One said, I only want to buy 50-cent dollars or 30-cent dollars or 20-cent dollars. You would find those as well. So pretty much, I think, because the universe of prospective businesses is so wide and so large, pretty much any criteria you set could work. I think the important thing is that one is very focused in what one is looking for and has clarity of what one is looking for. I've come to the conclusion, and it's actually a pretty, it took me a long time to figure this out, but I think for most of you it would seem obvious, is if there is such a thing as a best approach out of all of these approaches, the best approach, I think, would be one where one focuses on multi-baggers, businesses that can be a 10x in 10 years or less, or maybe 100x in 20 years or less. If one focused purely on the multi-baggers, there are some advantages that come up with that approach. One advantage is that one doesn't have much in terms of taxes. because you'll be holding businesses for a long time, under most jurisdictions around the world, until the positions are sold, unrealized gains are not taxed. So basically, it gives you an advantage. And depending on the place on the planet that you practice this, sometimes the tax rates can be as high as, 40, 50%. Deferring that for decades, or let's say 10 years or more, is a huge advantage because you get a free interest-free loan from the government. So there's an advantage in terms of taxes with this approach. The second advantage is that you don't have this continuous treadmill of needing to, find something undervalued, then it gets, fairly valued, and then you sell it, and then you go look for something else. So the multi-bagger approach to investing has a few quirks, and it requires us to kind of change our mindset on a few fronts. So one of the changes one has to make is that, traditionally when one looks at what Ben Graham, kind of the father of value investing, taught us, is that you buy something for well below what it's worth, and then as it approaches fair value, you sell the position, and then you go look for something else. But in the multi-bagger framework, what you would do is you would actually not particularly care if a position became fully valued or even overvalued. So for example, if you bought, a business for 30, 40 cents on the dollar, and it's growing, that dollar is growing, and at some point it's worth $1.50, for example. It's gone up more than 50% over what it used to be worth. But the stock is trading at $2, for example. So under traditional Grahamian approaches, you would sell that as you get past the $1.50 or whatever. But in the quest for multi-baggers, you would continue to keep it in your portfolio even when it became overvalued. You would sell it if it became egregiously overvalued. So one would need to distinguish between something that's overvalued and something that's egregiously overvalued. The three legs that we need, I think Chuck Akery called it the three-legged stool. The three legs that we need for these long multi-baggers is, first of all, the core economics of the business should have very high returns on invested capital, ideally without the use of debt, right? So you basically, like McDonald's doesn't need to borrow money to make a lot of money. The second is that we want very high integrity management, and we want insider ownership, kind of alignment of interest, where there's a smart entrepreneur or someone or insiders who own it, so they've got incentives. And the third is that we want a very long runway, so where we can see that this thing can go on for a very long time.
Thank you guys for watching. I hope you enjoyed. Don't forget to hit the like button and to subscribe if you haven't done it already.